Existing home sales ticked up in January, boosted by lower rates in November and December, but mortgage rates have since reversed course, climbing up for a third straight week. Those elevated rates and low supply could mean a drought for the spring home buying season. With more on the impact, we're joined by Orphe Divounguy, Zillow senior economist. Orphe, thank you so much for being here. What is going to give in this housing market? This is the question we keep asking, and it seems like we remain sort of at a stalemate.
Thanks for having me. Look, existing home sales increased 3.1% in January. And sales is still down, right, relative to last year. This is kind of because the homes that sold in January reflected homes that went pending a month or two ago. But, when you look at Zillow data, what you see is the dawn of the home shopping season. Sellers are slowly but surely returning to the housing market. Remember, fewer existing homes coming on the market in 2023 meant the housing market was supply constrained. But despite higher mortgage rates, we're starting to see some improvements on that front. New listings are up 6% when compared to last year, and inventory is also up 3% when compared to last January. So we're starting to see sellers return.
Is that more pronounced, Orphe, in some regions than others?
Absolutely. We're seeing the biggest uptake in some of these expensive metros like San Diego, Miami, Riverside, right? Listings are up 27% in San Diego, 22% in Miami. So you're starting to see that activity. In fact, when you look at price tiers, new listings for mid to high price tier homes have made the biggest rebound in January. So we're seeing that there's a ton of demand out there. There's still a lot of buyers out there. We got some great news in terms of population growth. We got great news in terms of productivity growth in 2023. And so you take that and you add the fact that the rest of the world is slowing down a little bit faster, and the U.S. looks a relatively more attractive place to invest. So we're going to have buyers despite higher rates, and we expect a more competitive home shopping season when compared to last year.
And Orphe, when you talk about these buyers, do we have any kind of line of sight into who these buyers are? What's the demo with, I'm just interested given where the 30-year fixed is at.
Yeah, well, look, we have a lot of cash buyers, right? Cash buyers have kind of taken over. But we also have, if you look at what we're seeing in the market in January, what we're seeing is sellers, in an environment where there weren't a lot of sales in December, sellers coming back are not quite sure how to price their homes. And so you're seeing 1 in 5 active listings with price cuts. And so it means that if you're a buyer right now, if you're a buyer coming in early, you may be able to take advantage of the fact that sellers are not quite sure how to price their homes to get yourself a great discount.
Orphe, we recently spoke to Meredith Whitney, who was known during the financial crisis for being one of the folks who spotted the subprime crisis sort of coming. Now she says we are, over the next couple of years, really going to see housing prices come down. She says it's because older Americans, boomers, are really, those on fixed incomes perhaps, are really feeling the pain of inflation, consumer goods, groceries, et cetera, and they're going to be forced to sell at a higher rate perhaps than people are expecting. Are you factoring that into your models? Is that something you think is indeed going to happen?
Look, we've been waiting for that silver tsunami for quite some time, and it just hasn't materialized. Older Americans are less likely to move than younger Americans. The bulk of the wealth in this country sits with boomers, right? And so I'm not sure that that's actually a story that I see in the data right now, or that I think is likely to materialize anytime soon. I think we're probably going to see a huge transfer of wealth from boomers to their children in the coming years.
Orphe, I'm interested to get your take as an economist, where you see the 30-year fixed head from here. According to Mortgage News Daily, Orphe, 7.08%. Where do you see Orphe in 6 months, 12 months?
Absolutely. So look, it's very hard to predict where mortgages are headed, but we have a strong economy. We have a resilient labor market. We have those tailwinds I mentioned, right? Unexpected population growth, according to the Congressional Budget Office, robust productivity growth, higher labor productivity growth in the last year than we had if you look at the 10-year average before the pandemic. And so we're seeing a strong U.S. economy still. And with inflation coming down, it's actually supportive of strength for the consumer. And so I doubt we're going to see mortgage rates decline a lot anytime soon. if you think about it, what I've been telling people is, the last time that we had big drops in mortgage rates, where were they, right? The start, the dot-com bubble burst, the start of the global financial crisis, and the start of a global pandemic. So I don't expect a big drop in mortgage rates. I really expect the U.S. economy to keep humming. Mortgages might ease somewhat. We know that the Fed is done raising interest rates and that rate cuts could be coming. So mortgages might ease somewhat, but we're likely not going to see a big drop in mortgage rates anytime soon. But the consumer is in a good place. The labor market's solid. There are so many factors supportive of housing demand. And so that's why, we expect to see a home shopping season this spring that's going to be modestly better than last year.
And how do you, you're going right where I wanted to head, Orphe, is looking ahead now, that all-important spring selling season. When you say modestly better, can you quantify that for us?
Look, attractive listings are still moving very quickly. Despite the higher rates, homes that sell go pending in just 29 days, 1 day faster than last year and 18 days faster than before the pandemic. So, I think that buyers should, if you're in the market and you can afford it, you should act now. Because things are probably going to continue to heat up, and we're probably going to have a more competitive home shopping season. And remember, inventory is still 37% below where it was last year, and so there's not going to be a lot of supply. You look at new home sales, right? A sign that perhaps buyers are still out there. New home sales are up 12% when compared to last January. So the constraint is still coming from existing homes not coming back fast enough. We have buyers out there, and those who come on the market will likely sell their homes very fast.
Orphe, it was great to get your views today. Thanks so much for joining us.
It was a pleasure. Thanks for having me.